we'll be going over how to claim the American Opportunity Tax Credit. So here's a breakdown of what we're going to cover. We're going to talk about the amount of the American Opportunity Tax Credit, the eligibility criteria, how you claim it, and then we're actually going to walk through it as it would be presented on the tax form. So let's start, before we talk about the credit amounts, just kind of a big picture view. So this is one of the 2 education tax credits that are available. And basically this allows certain taxpayers to lower their tax liability by a certain amount based on qualified education expenses. So that's it in a nutshell. So as I mentioned, it's the tax credit for qualified educational expenses. There have been a couple of tax code changes recently that have expanded the criteria, I guess, for qualified educational expenses. But what I would like to point out here is that this tax credit specifically is available for the first 4 years of your higher education or your child's higher education. So we're talking the first 4 years of college generally, as opposed to what people may be used to thinking about qualified education expenses when it comes to your 529 plan, allowing people to take money out for like high school or private, school education. We're not really talking about that. We're talking about college and higher. So first 4 years of higher education. And the last thing I'd like to point out is that this is partially a refundable tax credit. So it's a 40% refundable tax credit. We'll go into the details in a little bit. But what that means is the refundable portion can actually result in a tax refund, even if you have a 0 tax liability for the year. So, if you end up, and I don't mean tax balance, I mean 0 tax bill. So that refundable tax credit means that taxpayers that don't have to pay a tax bill at all can still get a refund. So one thing that I need to discuss is the amount of the credit. The credit is, the maximum credit is $2,500. So that per year, per person. So what that works out to is 100% tax credit for the first $2,000 of qualified education expenses. Once you reach above $2,000, then it's 25% up to a limit of an additional $2,000. So that breaks down to a total of a $2,500 tax credit per year, the first $2,000 plus 25% of the next $2,000. And 40% of that, or up to 40% of that, is refundable. So that is up to $1,000. So to be eligible, you have to meet certain criteria. So we'll start with the left and then kind of move on over. The student has to be pursuing a degree or some sort of a education credential, has to be enrolled at least half-time for at least one academic period beginning in the tax year. They cannot have finished the first 4 years of higher education at the beginning of the tax year, cannot have previously claimed the American Opportunity Tax Credit or its predecessor, the Hope Credit, for more than 4 years. So once you get through your 4 years, you can't claim this credit anymore. And you must not have a felony drug conviction at the end of the tax year. Another note that's not on here is that you cannot claim the American Opportunity Tax Credit for the same person in the same year as the Lifetime Learning Credit. So if you no longer qualify for the American Opportunity Tax Credit because of one of these things, you can always take a look at the eligibility criteria for the Lifetime Learning Credit to see if you may be eligible for that instead. Generally, You must have received a copy of IRS Form 1098-T. This is in most cases. There are exceptions that may exist if there is a non-resident that, if the institution is not required to issue that form, they're not required to issue it for non-residents. Situations where scholarships completely funded the education. So if you didn't receive a 1098-T because all of your college costs were 100% scholarship funded, you can still use IRS Form 8863 to claim the tax credit. You most likely will, be interested in that in the refundable portion of it. But basically, if you still went out of pocket for other things that didn't go to your college, you can then claim the tax credit. There are certain modified adjusted gross income requirements. We'll go over those in a little bit more depth when we actually get to the form itself, because we can drill down into that detail then. And you must have a valid taxpayer ID or a TIN before the due date of the return. That could be a social security number, an ITIN for people who are ineligible for a social security number, or an adoption taxpayer identification number. So as an aside, there are various forms that are being mentioned or various topics. If we don't cover that form in depth, we're going to put links in the show notes to any forms, like videos and articles that we've created about forms mentioned in this video, so that you can then drill down a little bit closer. For example, if this taxpayer identification number is of concern to you, we'll put links in the show notes to the various forms that you can use to apply for one of these numbers, identification numbers as applicable. So there's a separate form for the social security number, the ITIN, and the ATIN. We'll put links in the show notes for all of those resources, and you can check those out. So to claim the AOTC, we're going to walk through each of these in steps. So basically, the IRS Form 8863 has 3 parts. The Part 3 actually contains an AOTC portion and a lifetime learning credit portion. Then we would go back to complete Part 1, which consists of the refundable tax credits, and then Part 2 is the non-refundable credits. So the refundable credits are reported directly on your Form 1040, and then the non-refundable credits are reported on Schedule 3, which eventually make their way to the Form 1040. So let's move on to the form. So I've already kind of partially completed this form. This is our hero, John Doe. He is completing this. He's claiming his daughter as a dependent for this. So now at the very top, you'll see a note that says complete a separate Part 3 for each student for whom you're claiming either credit before you complete Parts 1 and 2. So basically, if you had 3 students that you're claiming a tax credit for, you would complete 3 Part 3s. And we'll go into the detail back in a moment on Part 1. This is the refundable American Opportunity Credit. As I mentioned before, Part 2 is for either the Lifetime Learning or the American Opportunity Credit, both the non-refundable parts of both of those. And then in Part 3 is the student educational institution information, right? So I didn't get a chance to finish that before we do this. I kind of quickly jotted in the American Opportunity Credit down here at the bottom. We'll circle back up in Part 3 and kind of walk through that. So let's just imagine that we're talking about $4,000 worth of qualified education expenses. If you had $20,000 of qualified expenses, the IRS doesn't really care. Just put in up to $4,000. So then you subtract $2,000 from that amount, and we get $2,000. multiply this by 25%, and then add the $2,000 back. That's where we get our total of $2,500, which is the maximum per person per year. Let's go ahead and quickly just complete the rest of this information. So bear with me while I complete this. So your tax prep software will probably automatically carry these fields over. I'm doing this manually. So let's just say that name of the first educational institution. Since John Doe's from Texas, we usually put down Texas related references. I have zero idea what the address is, so I know that it's in Austin, Texas. Please don't look this up on Zillow. I'm pretty sure this is wrong. So that now the rest of this is kind of a checklist for verifying. Did the student receive IRS Form 1098-T from this institution for 2023? We can check yes. Did the student receive 1098-T from the prior year with box 7 checked? We'll say no, but basically you can use prior year expenses that were paid during the tax year. So I'm not completing the second column, but just imagine that you didn't have enough expenses from the first educational institution. You can put in a second in here. And then you would have to make sure that you have the employer identification number. So, you know, if you're claiming the American Opportunity Tax Credit, then you would need that information. So let's just say there we go. So again, this is going to be kind of your cheat code for whether or not you can actually receive the American Opportunity Tax Credit. If you look at all of these, if you select the wrong answer, then you're going to be prompted to stop and not complete the rest of it for the American Opportunity Tax Credit. So if you claimed the AOTC for the prior 4 years, any 4 years, doesn't need to be consecutive, then stop. Just skip down to the lifetime learning credit, right? All of these mean stop, go to the lifetime learning credit. So we'll select no. So when I say the right answer and the wrong answer, make sure that if you're clicking something as the right answer, that it's actually factual. So, you know, no bonus points for lying just to get the right answer on the form. So was the student enrolled at least half time? Yes, she was. Did she complete the first 4 years of post-secondary education before the tax year? No. So was the student convicted before so this is the drug offense clause. So has to be a felony. It can be possession or distribution of a controlled substance. So you can look deeper into the actual tax code to see if there's anything else, if that's a situation that may or may not apply to you. So again, you can't take the AOC, the AOTC, and the lifetime learning credit for the same student in the same year. But if you're already not able to take the American Opportunity Credit, you can skip down, put in your lifetime learning credit, like the qualified education expenses, and then go from there. So now that we've got that information, we went to part 1. We put in $2,500. So in this sample, so $180,000 is the cap for the modified adjusted gross income. We'll kind of walk through these calculations here. This is basically kind of a phase out. So if you aren't above that cap, but you're somewhat close, then you'll have to calculate a partial credit, or at least a partial refundable portion of the credit. So this line number 3, it's going to have you enter the amount from line 11 of your Form 1040 or your Form 1040 SR. So that's if you're not filing for foreign earned income exclusion, that would be IRS Form 2555. If you're not excluding income from American Samoa, that's on IRS Form 4563. If you're not excluding income from Puerto Rico. So IRS Publication 970, here's kind of the sneak preview. It's going to make you add those income numbers back in. So just keep that in mind. This isn't going to be applicable for most taxpayers, but if you are excluding foreign earned income, the foreign housing deduction, income from Puerto Rico or American Samoa, you'll have to add that back in and then enter the total here. AGI, you don't need to write that in there. That was for my benefit, so I could be prompted to kind of discuss that number with you. So we take the difference, subtract line 3 from line 2. So if this amount is negative, if you had $200,000 of AGI, then you wouldn't be able to take the credit. You would just stop, and then you wouldn't be able to claim either the American Opportunity Credit or the Lifetime Learning Credit. So there's no skip down to line 31 for this. You just can't take the credit. So enter $20,000 for married filing jointly. If the line 4 amount is greater than or less than line 5, then you would enter 1.00 on this. So what that means is you're outside the phase out period. Let's imagine that this was 170,000. That means that this would be close enough to the phase out, and you would have to actually divide line 4 by line 5. Instead of 1.00, we would have 0.500, and then we would multiply the line 1 amount by 50%. That would result in 1250, and then we would multiply that amount by 40%, and we would get 500. So basically, if you're in the phase out, which is between 160,000 and 180,000, then you can only take a prorated fraction of that tax credit. So that doesn't apply to us. I'll change these numbers back to normal. I won't change all of them. So there are a couple of criteria. So there's a box here in line 7 that we should go over. Basically, if you're a taxpayer that's under the age of 24 at the end of the year and you meet the conditions described in the form instructions, then you probably won't be able to take the refundable American Opportunity Tax Credit. Instead, you would have to bring the entire tax credit down and treat it as a non-refundable tax credit. So really quickly, we'll just go to the instructions and we'll talk about what that looks like. So line 7, if you don't qualify for that, if all 3 of these apply to you. So number 1, if you're either a minor at the end of the tax year, if you were at least age 18, but your earned income was less than half of your support, like most college students, or if you were between 18 and 24, you were a full-time student and your earned income was less than half your support. So again, think most college students, unless you're an outlier that's got whatever, a Bitcoin farm that's just printing you money every day. So one of those things in item 1, if at least one of your parents was alive and if you're not filing a joint return for the tax year. Generally speaking, if you're under the age of 24, at least one of your parents is alive and you're not filing a joint tax return as a married person, then you're not eligible on your own to claim the refundable portion of the tax credit. Your parents could, and that's the design, is that this tax credit is primarily designed for families that are supporting their child through college. So let's just imagine that John Doe got the full credit for his daughter Elizabeth. He's got $1,000 worth of the refundable American Opportunity Credit. So now there is a credit limit worksheet that's in the form instructions that we'll kind of go over. So we'll just talk about it real quick. So this is the credit limit worksheet that would help you. Sorry, let me just double check and make sure that. Yep. So this is going to be the amount that you use to calculate the amount on line 19. So, yep. So the line 18 amount, that happens to be we'll circle back to the credit limit worksheet in just a moment. So $1,500 here. After we complete part 3 for each student, we're going to add the total of all line 31s. So this is 0. We're not claiming the lifetime learning credit here, right? So let me just double check. Yep. Since we're not claiming the lifetime learning credit, we're going to skip lines 11 through 17, and then we're going to go directly to line 18. We enter 0, and then we go to line 19, and we enter the line 7 amount from the credit worksheet, which also happens to be the line 9 amount here. So because we're not claiming the lifetime learning credit, we don't have to go back to this credit limit worksheet to complete that portion. Let me just double check and make sure that I'm not speaking out of tone. So no, since line 31 was 0 for this one student situation, then we would have to skip all of this. Now, if you have one student that you're claiming the AOTC for and another student that you're claiming the lifetime learning credit for, you may need to go back and actually calculate through this, because again, you're consolidating the credits for multiple students, and you're going to have to work through the credit limit worksheet to determine the amounts that you're excluding. These non-refundable credits also have to be kind of, I guess, subordinated from other credits, non-refundable credits that are reported on Schedule 3. So that's what that calculation is for. For the American Opportunity Tax Credit, you don't have to complete those parts. So, if we're just talking about the AOTC for one person, then we would enter 0 here, skip lines 11 through 17, enter a 0 here, go to line 19, and then basically we're going to drop this figure down. And that's the, yep. So that's what we would enter here. We would then also go to Schedule 3. So I'm going to pull that up in just momentarily. And then we would put the line 19 amount here on Schedule 3. For the refundable portion of the tax credit, we did previously mention that, and that is going to be on line 29. So let me take you to line 29, which is the American Opportunity Tax Credit line 8. and then we would put her $1,000 tax credit here. So that's how you would claim those. And then any amounts from Schedule 3, you end up dropping down into, I believe, line 31 for that. So, yep. So basically we're going to, line 20. So all of those items would go right here on line 20 from Schedule 3. So that's how you report the American Opportunity Tax Credit on your tax return. This is how all of this would flow through. Again, the non-refundable tax will reduce your tax liability, but not below zero. Whereas the $1,000 refundable portion is under the payments portion. So the total tax amount can't be below zero. However, when you treat the refundable portion of a tax credit as a payment, then this will actually reduce your tax balance below zero, even if this is zero. So just keep that in mind. That's how it would be reported on your tax return. So that's all we have for claiming the American Opportunity Tax Credit. As I mentioned, we'll put a link in the show notes to the resources we've created about the forms and schedules mentioned here. And if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.